There are so many strategies out there, but the difference between a winning strategy and a losing strategy is how to identify a good one. Today I'm going to show us on how to identify a good supply and demand zone. Firstly, I'm going to make us understand some key things we need to note before we can identify a supply zone and a demand zone. First thing we have to do is to understand the market structure. We all know that markets move in three structure. We have the uptrend, that is when the market is trending up, and we have when the market is trending down, which we all know as the downtrend, where we will be looking at series of lower lows and lower highs. Then we have the ranging market, where the market is not making any decision but just moving up and down in a particular range. That is where we have some people that trade the breakout and retest of this particular zone. Now, for supply and demand, we have to focus on when the market is trending, which is when it is either trending up or trending down. When it is forming series of higher highs and higher lows, that is where we want to enter our trade. Now, for this supply and demand zone, there are some key elements we have to identify before we can know if this zone is really valid. Now, for a potential supply zone, we are looking for two things. Number one is we want market to break a structure, that we want to see the market breaking a particular structure to the upside, that is saying something like this. Now, if you look at this here now, the market has broken this structure. So we have something like this, which is our break of structure. This is our break of structure. The market has broken this structure. So now we want to see the market coming down to retest this angle here. We want to see the market coming down to retest this demand zone here before going up. Let me also print a perfect example. Now, this is what we are looking at. So we are still going to go to the real chart to look for a real example. So we want to see something like this. We want to see something like this. And we can have, let me make this, okay, so we have something like this. You'll see the market coming back here, forming some kind of consolidation and moving towards the upside here. Now, once we have this structure formed like this, we are looking for the market to come down to this area here. This consolidation area before this massive push up is our demand zone, because we can see that there are many people that are willing to buy at this zone. So you see this consolidation area, that is our demand zone. So we are going to mark this zone out there, and what we are looking at right now is we are looking for price to come down to this zone. So we are going to have something like, we are looking for a long position, because we've seen things that validate our buy in this trade. Now let me show you something here. So the first thing here is we have a break of structure here. We have a break of structure here, which we title the BOS. Now we can see an imbalance here, because this impulsive movement here has created a fair value gap here. And you know, whenever we have a fair value gap, we want the market to come down and tap into the fair value gap and push up. So also, if you don't know much about fair value gap and you want me to make a video about fair value gap, please put it in the comment section. Let me know if you want me to make a video about fair value gap, and I will ensure that my next class is going to be on fair value gap. So in this scenario here right now, we are expecting the market to come down and tap into this zone before going up. So what we are going to do is we can either set our long position here. We'll look for buy here, while our stop loss is going to be below this zone here, and we are going to target the next high, which is this particular high before the market coming down, as our take profit. And then we'll be seeing something like this. We'll be seeing something like the market tapping into this zone and going up to create another high, and that is how it is. So we are going to look for a perfect example using this GBP USD as an example. Now let's go to the real chart. Okay, so this is a 1 hour chart of GBP USD. So in this chart here, we can see that the market has been trending up in this chart. We can see series of higher highs and higher low. We can see it has been trending up, and with the help of this, you can see that what we are looking for in this market is we've been seeing highs and low being taken out. So what we are looking in this market is we want to buy. So now this is the high of this particular market. This is the high, so we are going to mark the high out. So I'm going to use this to mark this high. So this is our high here, and why this is the low of this place here. So this is the low here, this is the low, so this is the low here. So now what we want to do is, this is an uptrend, and we can see that the market has tried to break this particular low for multiple times now, and for this period here now, but the market was unable to break this low here. But in this part here, we are able to see the market pushing up to break this particular low here. The market was able to break this low, to break this high here, forming another higher high here. Now, doing this formation, we have to pay attention to something. Doing this breakout here, which the market take out this, we can see that we have this massive impulsive movement, this massive impulsive candle here, and after this massive impulsive candle here, we are able to break out this, and we have a perfect demand zone here, which is this is a demand zone here, which is the last candle before the impulsive movement, which is our imbalance zone here. So we know that since we have this fair value gap, we have this zone here, we have this imbalance zone, we know market is going to come down here to fill this particular zone here. So now what we are going to do now is we are going to identify by using our rectangle to mark out this zone here and extend it, that okay, when this market come back to this particular region, the market is going to fill it and it's going to go up. And we can now take our we can take our long and target from here, put our stop loss below this region here, below this low here, and either target 1 to 2 or 1 to 3 risk to reward. We can take our profits at this high here. So if it is 1 to 2 or 1 to 3. So now this market has already played out, but I want us to see how we can mark. This is a perfect demand zone here. So if you look at what the market did here, we can see that we have the market tap into this zone here. You can see the market tap into this zone here, and after that we can see, if we should extend it, you can see that the market hit our take profit at this zone here, and this is like close to 1:5 risk to reward. So this is a perfect demand zone. And that is how we identify supply and demand. So what makes this zone valid is because we have a break of structure. This is break of internal structure, this is the break of overall structure, and this is the candle before this big movement that led to this particular break of structure, and this is the result. Now let's look at another example. So in this second example, I'm going to be using the bearish. It's still the same thing. So what we are looking for is the supply area. We want to see the market forming series of lower lows and lower high. And now if you look at this particular market here, you will see that the market has been trending down. So we have the market going up, and we have a break of structure at this particular region here. So this is the low, this is the lower low of this particular market here. So we see this low being taken out at this particular region here, and ever since the market has been trending low. So now we will first mark out this region here. So mark out this region here. So this is the low being taken out, and then we know that the market has shifted from uptrend to downtrend. So we have our change of character here, the market changing. If you don't understand market structure, you can watch my previous video. If you want me to also make a video, you can let me know. Now if you look at this market shift here, you can see that we also have a an imbalance here. We can see we have a fair value gap here. This is the last candle. This is the supply area, the last candle before the impulsive movement. And look at what market did. After taking out this structure here, the market actually came back down here and also moved back up to fill this gap, fill this very fair value gap before coming back down. And you can see now, after filling this gap, the market created another imbalance, another break of structure here, break of this particular structure, which led to this another supply zone here. This is another supply zone here, which we know that okay, this market is meant to come back to this supply zone here before trading down here. We can see that after that we see the market coming back up here, filling this zone here. So we can mark out the two supply zone which we have, which is the first one. We have this zone here, which is a supply zone here, which we are expecting market to come and test. And after the market coming back here, we see that the market did not fill this particular, it filled this gap, but it didn't get to this zone here. And we can see that at this point here, we have another break of structure here. We have another break of structure here, breaking of this structure here. And now this is the origin, this is the candle that led to the break of structure here. And we have another fair value gap here, creating imbalance here. So we mark out this zone here as our second zone. So now what we are expecting is, we are expecting market to come back to this first zone here and come down. So now we can do something like this. Just come here, go on your short position. We can put our short position here, target this, and if it is like we targeting, let me say we are targeting, if you want to do your full target, you can just put your stop loss at this upper zone here. This is 1 to 3 weeks to reward. So now what we are expecting is, since we have two zones here, we are expecting market to come back to this zone here, tap us in and go back up. And if market should fill this other gap here, we are still going. And you can even also make it like this, but for me to be safe, since I have these two zones closer to each other, I will just target to put my stop loss here and wait for the market to come back to this supply zone here, and I'm going to enter my trade. Now look at what the trade did on the long run. So keep on extending this and look at, we'll wait until we see the market tapping into us. So now at this particular point here, the market has tapped into our zone, and you can see instantly after tapping this particular zone here, let me extend it so you can see, after tapping this particular zone here, look at what happened. We hit our TP. Very, very easy. So that is how you identify a valid supply and demand. The first thing you look at is the market structure. Understand if the market is going uptrend or trending down. You don't trade during the ranging market. You focus on the trending up or trending down. The next thing is to watch out for a break of structure. We have to have a clear break of structure. We have to have an imbalance. Then you can now mark out your perfect supply and demand zone. So follow this channel for more educational video on trading strategy. And if you also want to learn, you can join my free Telegram channel where I drop signals, and you can also reach out to me for private mentorship. So if you want me to talk on any other topic next, put it on the comment section below, and we are going to be treating that next. See you in the next video.